Have you noticed that all car insurance company ads are hilarious, but none of them do anything to explain what kind of insurance you should actually purchase for yourself to protect you and your family? Well, watch this video and find out. Hey folks, James Abrenio here, owner of Abrenio Law, your Northern Virginia criminal defense and personal injury law firm. Here I wanted to talk to you about car insurance. Yes, I know it's boring, and yes, I know the car insurance company ads are hilarious. In fact, I bought my own Geico policy because they're pretty funny, but when it comes down to it, none of those ads actually educate you in order to tell you what car insurance is, what it protects, and what kind, most importantly, you should buy to protect yourself. So this video is going to walk you through the different types of car insurances, what they do, and how they're going to protect you going forward. So to help explain this, we're going to walk through a couple slides. The first is going to be the slide entitled Different Forms of Car Insurance. And you're going to notice there, we're going to highlight 4 different types of car insurance. The first is property damage coverage. The second is liability coverage. The third is medpay, or medical expense benefits. And the fourth is called underinsured motorist coverage or uninsured motorist coverage. And those are really 2 of the same forms of coverage. It just depends on whether or not the person that hits you actually has coverage. But that's going to be grouped together, and it's super important, so make sure to continue watching this video. So I figured the first way to help explain car insurance and different types of it is to actually help you look at the documents themselves. To help us, what I've done is I'm putting up on the video an example of what we call a declarations page or an insurance summary page. And here you can see that this is a USAA insurance declarations page. And what I've done is I've redacted out any vital information. You'll see name and insurance and address. Obviously, if you purchase this policy, it would have your name and address, and then operators is the listing of individuals covered, and then there's a listing for the actual individual cars that you own and that are under the policy. So what I want you to do is take a look at what we just referenced before and start understanding what this document is so you can see it. So the first is the liability coverage. You'll see here for this example, there's $300,000 per accident, $300 per person, $500 per accident. The second part is property damage coverage. You'll see there, which here is $100,000. The third is medical expense benefits, or medpay, as we discussed earlier. You'll see here it's $10,000. And then the other part that we want to talk about and we'll address in this video is the uninsured motorist coverage, which you'll see here is $300,000 per person, $500,000 per accident. Now, before we get into the different types of coverage, let's talk about the difference between per person versus per accident. What that really means is if you're injured or if you have an insurance claim, and let's say the damages are, using this example, let's say the damages are $600,000. Let's say you were really badly injured. In this case, when you look at the $300,000 per person, that means that this policy would only cover up to $300,000 for you individually. Now, you also see the $500,000 per accident, and you may be asking, well, what does that mean? Now let's say in this example, you have 2 people in your car that were injured and each had a $600,000 claim. That would mean that per accident, there would be a total of $500,000 to cover the entire claim, and each person could get up to $300,000. So really, per accident combines the entire pool of funds for that particular policy in a particular accident, and then the per person sets the limit per person. With that being said, now let's move on to the different types of coverage. The first type of insurance coverage I wanted to talk about is something called liability insurance. Again, as we talked about before, there's going to be multiple types of insurance that you buy with your policy. And what liability insurance does, it protects you in case you actually cause the accident and you actually injure somebody else. So let's say you're driving down the road, you come to an intersection, you have a red light, but you miss it, and then you T-bone somebody else and they're injured. If you have liability insurance, that protects you in case they sue you. So that really allows you to have some financial certainty even though you cause an accident. And just to be clear, in Virginia, the minimum required coverage for liability, and you also see this number as well in underinsured motorist coverage, is only $25,000. That might be a lot of money if you cause a fender bender and somebody had to go to the ER and just get checked out, or didn't have to go to the ER and have a minor sprain or something. But if there's devastating injury involved in an accident, which when you're driving a 1,000-pound vehicle, people can get injured. Accidents happen where people get injured all the time. Let's say you have to stay a night in the hospital, $25,000 is just a drop in the bucket. So that's my first caveat when talking about these insurances, is you want to make sure that you're not just buying the minimums, which in Virginia is only $25,000. In fact, I recommend getting $1 million liability policy, because that's only a couple $100 more a year than that $25,000 policy. And also, and we'll talk about this later, when you buy liability insurance under Virginia statute, it's required to match your UIM coverage. So when you buy that $1 million policy, unless you say specifically otherwise, you'll get $1 million of UIM as well. So my recommendation, have $1 million. Don't just try to save a couple $100 or a few dollars a month thinking that this is going to end up being a great benefit, because if you end up needing the insurance, having that big coverage is going to really save you a lot of headaches and sleepless nights. So moving on, the next type of insurance is called property damage. Now, property damage relates to the actual damage of physical property, to the damage of specifically your car or their car. And this coverage protects you if you hurt somebody's car. Let's say you ding their fender or you rear end them and do more damage. When you have property damage coverage, if they sue you, the property damage will protect you and pay them out. Now, property damage also protects you if your car gets damaged by somebody else and they don't have enough insurance, or they don't have any insurance. You can tap into your own property damage coverage, and it will do a great service to help you get your car fixed. Now, just going back to our original example, if we bring back that example declarations page, here the property damage was actually $100,000. So that's going to be a lot of coverage. You can buy a lot less than that. I've seen as low as $10,000, some even lower. I think they might have been out of state. But again, with this, I would get a lot of coverage, probably $100,000. If you hit that Escalade and you cause an accident, that's going to, again, give you a lot of less stress involved if you cause an accident. Also, if you have a nice car, you're going to want to make sure you have a lot of insurance too. So a couple things to point out. Number one, when it comes to property damage, you don't necessarily need an attorney. In fact, most property damage claims are resolved without an attorney. Your property damage claim, if you have a car accident claim, is going to be separate and apart from any personal injury claim, meaning injury to your body or injury to somebody else's body. And in fact, typically the property damage claim will have its own separate adjuster, a separate person that's handling this claim that's going to work on it with you to get it resolved. And so you can make a claim against let's go to the example, if somebody else caused your accident, you can make a claim against their insurance, their property damage insurance, and a lot of times you'll be able to resolve that with them directly. If their insurance company is causing you stress and heartache and are not responding, you can also go to your own property damage insurance coverage. So if you have enough, you can work with your own adjuster. Now the caveat here is you may have to pay a deductible if you have a deductible required. So a lot of times people will have a $500 deductible or a $1,000 deductible on a property damage claim. If they go through their own insurance, they're going to have to pay that deductible. What will then happen later on, your auto insurance will then go after the defendant's auto insurance. If later on they're successful in getting that money back, you actually will be refunded your deductible, but initially out of pocket, you're going to have to pay out of pocket. So that's the downside of going through your own auto insurance company for the property damage claim. But I will say in many instances, it ends up being worth it because at least the clients that I have, and I typically don't get involved in property damage claims, but the clients that I deal with typically say that it saved them a lot of time and heartache because it ended up smoothing the process a lot. Another point that I wanted to make is something called gap insurance. So oftentimes I'll get calls for just property damage claims, which I don't do. I'm a personal injury attorney, so if you've suffered an injury, I will help you with that claim because that's where I can add value. But I will get a lot of calls from people that just bought a Tesla or some nice vehicle, and they're upset because when they get a check from the auto insurance company from the property damage claim, whether it's their insurance or the other insurance, they're saying, James, they're only giving me 60% of what my car is worth. They're not giving me the actual value, the full value of the car, and they're upset. And my answer to them is, well, did you buy gap insurance? So gap insurance is something that is relatively new in the insurance world that essentially allows you to be compensated for not just the market value of your car. So remember, when you drive that new car right off the lot, it typically loses about 20% of value simply by being driven off the lot. As it ages, of course, that speeds up. Gap insurance will allow you to be compensated for that gap from the market value to what an actual true value of it is. So the gap insurance will give you somewhat more fair of a resolution. So you have to pay a little bit more for gap insurance because it's more money, potentially if you get into a car accident. But if you buy a brand new car, a nice vehicle, you want to make sure to look into gap insurance because if that thing gets dinged, you don't want to be super upset later on because you didn't buy that gap insurance. And again, the last point is it not only protects your car if your car is damaged by somebody else, it protects you from being sued, or at least helps you out if you're sued if you cause damage to somebody else's car. Now, I want to move on to the next type of insurance. And before we move on to that, we're going to talk about insurances that deal with personal injury claims and medical bills and lost wages and all those kinds of things. I want to address something that typically comes up a lot because it's a misunderstanding. People that have health insurance and involved in a car accident oftentimes call me and say, James, I didn't want to use my health insurance because I didn't cause the accident. Why should my insurance have to pay for my medical bills, for my lost wages and things like that? What I say to them is, if you're lucky enough to have health insurance, make sure you use it. There's a couple reasons why, but just trust me, if you're in Virginia and you have a Virginia car accident case and you have Virginia health insurance, use your health insurance for your treatment recovery. Now, there are a couple of reasons why. Number one, there's never any guarantee at all that you'll be successful in your car accident case. Yes, you can litigate it for a year or 2 years. You can go to trial and be up in front of a jury and a jury disagree with you and you lose. And if you lose, that's it. No more money. And here you will have outstanding medical bills that haven't been paid over months or years, and bills go into collections. So you never want to risk it when you have a health insurance policy to cover that claim. The second reason is kind of inherent in what I just talked about. These policies and car insurance claims take a long time to pursue. Many take weeks, many take months, many take years. The more complex your injury, in fact, the more treatment you get, the more likely it is that your car insurance personal injury claim will be extended. While that's happening, your doctors are going to be treating you and they're going to want to get paid. So if your orthopedist has billed you $5,000 for the first 3 months of treatment, he's not getting paid. He may say to you, look, unless you can pay, I'm not going to treat you anymore. So you're not going to have access to care. But also, he's going to say, by the way, if you don't pay your bill, or she says, by the way, if you don't pay your bill, I'm going to send you to collections. And they will do that. Medical bills are one of the leading causes of bankruptcies in America today. So if you're fortunate enough to have health insurance, make sure that you're using it because you don't want to have your medical bills going to collections and hurting your credit. Now, you may have to pay a deductible or a copay, even if you have health insurance. But even if you end up having to do that, I can tell you having health insurance will allow the process to be easier. You'd rather pay a $50 copay than the total bill out of pocket. Or even if you have a $3,000 deductible, let's say you have $10,000 in medical bills, once you get to the $3,000 mark, then it'll start picking up afterwards, so you're saving money. So make sure to use it. The other reason is one that's not really appreciated until the end of a personal injury case, but it will save you money in the long run if you're successful in your personal injury case. So you may have noticed in your explanation of benefits, if you look at the bill, let's say there's a $100 bill, you'll look at it, you'll see the amount charged is $100, you'll see the allowed amount is, let's say, $40, and then you'll see copay of $10, let's say, for instance. What that means is the bill, the list price of the bill, the retail bill, was actually $100, but because you were treated by your health insurance, which if it's in network, they will get a discount on that bill. So it will go down to $40, and then you'll pay your copay. So let's say if your copay is $5, really that $100 bill now only is $45. So the benefit of that is they're taken care of. But let's say you end up getting money in your personal injury case. So what we will do as personal injury attorneys, under Virginia law, we're allowed to claim for that $100 full retail price of the bill. So the $100 plus pain, suffering, inconvenience, and other damages. And you may end up later on having to reimburse Aetna or Blue Cross, Blue Shield, whoever your health insurance is, but you're going to reimburse at that $40 rate. So you're going to reimburse at a lower rate, so you're going to get a benefit of that insurance discount. If instead you waited and just said, I'm going to submit all my medical bills to the car insurance company and then we get you a settlement, you're now going to, out of your settlement, you're now going to have to pay that $100 medical bill dollar for dollar. So you've just lost money that instead of going $40 to Aetna or Blue Cross, $100 is now going to Ortho Virginia, whoever your ortho or medical provider is, and now you've lost money out of your settlement because you didn't take advantage of your health insurance. So with that being said, now let's talk about insurances dealing with medical bills and car accidents. Now, one that's often overlooked is called the medical expense benefits. That's usually a policy that you purchase that's a smaller amount. So if we go back to our example, if you're looking at ours here, there's a medical expense coverage of $10,000. So $10,000 is actually a decent amount of medpay or medical expense coverage that this hypothetical person would have purchased. Many times you only see $2,000 to $3,000, but the great thing about medpay is it's something called no-fault insurance. So you can actually claim it, and a lot of times you don't even need an attorney to make a medpay claim. And so let's say you have this health insurance deductible, you can actually submit your medpay, the bill to medpay, and they'll pay that. Or if there's a bill that's outstanding up to the amount, they'll pay that. Or if your health insurance paid it and the bill is fully paid off, you can still submit it and you'll be reimbursed at the incurred rate. What the incurred rate means, either the amount that is outstanding, so they have to go directly to the provider and you paid out of pocket and you get reimbursed, or the amount that the insurance paid. So again, going back to that $100 example, let's say your $100 bill, $40 was paid by Aetna and $5 was paid by you. You will get $40 returned to you from this MedPay for reimbursement for that, and you'll also get your $5 copay. So MedPay is something that not a lot of people think to buy, but it's in addition to all this other coverage, and it can be claimed on top of your health insurance. So you can submit your bills to your health insurance company as well as your MedPay. So that's something you shouldn't overlook. The next type of insurance is probably the most important to protect you and your family, and that's the underinsured or uninsured motorist coverage, also known as UIM or UM. And what this coverage does is it protects you and ensures that you're okay financially, assuming you bought enough, if the defendant doesn't, the person that caused your accident doesn't have enough insurance or doesn't have any insurance at all. And what it will do is it will supplement the defendant's insurance. So let's say you have $100,000 in a personal injury claim. Let's say your claim is worth $100,000. Let's say you bought $50,000 of UIM, and let's say the defendant bought $25,000. So the way it works is you go after the defendant's insurance first, and here it would be $25,000. You then would go after your insurance policy. Now you have a $50,000 limit in this example. I want to be clear that the UIM limit or underinsured limit that you buy, it only sets the outer limit of how much money is available. It doesn't what we do call stack. It's not like here it would be $25,000 plus your $50,000 policies to equal $75,000. Instead, think of it as essentially a cloak over an existing artifact. It essentially covers it. So it goes $25,000 up to your $50,000. So in this example, you would have $25,000 from their insurance company and $25,000 from yours. And then you would have essentially $50,000 that would be uncompensated. And so it's those scenarios where I want you to also be clear that you want to make sure that you don't just meet the Virginia minimums of $25,000. This is, again, where, as I referenced in liability policy coverage, I want you to buy as much UIM insurance as possible, preferably $1 million. Again, it's only a couple more $100 a year, and it will protect you. So let's say you have that $100,000 claim. The defendant only has $25,000, but you have $1 million in UIM. Now you can see you're well covered for the claim, and you have a chance of being fully compensated for your injuries. Now, a couple things to notice about this. The first thing is, just like MedPay, you can claim this in addition to using your health insurance. So as I talked about before, this is where it's important. Use your health insurance first. You're going to also claim for those medical bills in the UIM claim. You may have to reimburse your health insurance company, but it would be at that discounted rate, so you're seeing more money into your pocket. The other thing is, this is also something called a no-fault policy. So you may be worried, James, well, somebody else caused my accident. They caused my injuries. Now they're going to cause my premiums to go up. Well, the benefit of UIM is that it's a no-fault policy. Because you didn't cause the accident, it typically will not cause your premiums to go up because you didn't cause the accident. It was unpredicted that somebody was going to run a red light and T-bone you. There's nothing that you could have done to prevent that, so it serves no purpose to punish you for the accident, of course, except to get the insurance company more money. But in this case, they're not doing that. I believe when you take all this together, this is my cynical view when we think about these car insurance companies and these ads that you see. Again, I think I think a good sense of humor. I think they're hilarious, but what we talked about is never talked about through those ads. This is the kind of education that you need to be aware of, and when you're seeing car accident commercials, think about why are they focusing on minor property damage claims and humor rather than talking about the benefits of having actual coverage. And the reason being, at least my cynical view, is they want to keep you an uninformed consumer because they're going to make more premium if they sell $25,000 policies rather than $1 million policies, because they know that there's a limited liability to them if you get in a serious car accident and you bought a $25,000 policy than if you bought $1 million policy, so they may have to pay out that full claim. One last caveat I will say is with UIM, and I hear a lot about umbrella insurance policies, and I hear that a lot of times what insurance companies will do is say, well, you don't need UIM, we'll just sell you an umbrella policy. Well, the reason that is, and the reason I don't like them, is typically umbrella policies don't include UIM coverage. So you may have $1 million umbrella policy. What that really is a $1 million liability policy. So if you cause an accident, it's going to help you there, but it doesn't have the UIM protection. So if you are seriously injured in your car accident, it's not going to protect you or your family. Now, the topic of car insurance, this video, which runs about 25 minutes, I would suspect, is important. There's a lot of other caveats that we could talk about, and if you have other questions, feel free to comment in the comment section below or reach out to me. You can reach us at www.abreniolaw.com. You can give me an email at james@abreniolaw.com. You can give us a call at 703-570-4180. Make sure to follow us on social media. We're on Facebook, we're on Twitter, we're on LinkedIn, Instagram, obviously YouTube. But make sure to let us know if you have additional questions. This video doesn't address all the complexities when it comes to the UIM coverages and liability and whether or not things stack and all those kinds of things. And I'll probably end up doing more videos about that. But if you have a question, if this video raises questions, let me know. Also, if you like the video, make sure to share it, like it, give us reviews. Our goal is to get this in front of as many people as possible because we're trying to educate consumers about auto insurance and how important it is. And we may not be as funny as Geico or Progressive, but our goal is to educate. And honestly, if we had a stand-up routine, I could probably beat them. But so make sure to reach out. Look forward to talking to you. And if you have any other questions about Virginia car accident law, Virginia car insurance law, we also do criminal defense, make sure to reach out to us. We look forward to hearing from you.